If you trade the ORB strategy and you're not profitable, I'm going to show you exactly why. Now this is a backtest I did over the last 90 days, and you can see we took 25 trades with only a 28% win rate. If we look at the actual trading, you can see I coded my version of the ORB strategy, and the indicator is indeed taking trades here, but it's losing out right there. So if this is you guys, I'm going to show you how I added one simple filter and got a win rate that increased by more than 50%, and I'm going to show you with proven results. So stay till the end to see that. Now let's look at how to actually trade this strategy. So to first trade the strategy, we want to mark out the opening high and low of the first 15-minute candle in the New York session. So I'm on the NASDAQ right here. If we go to the 15-minute time frame, you can see I marked out the first high and low with the indicator that I have, so it does it automatically. Then we want to scalp on the 5-minute time frame. So what I'm now looking for is a breakout on either the up or downside of this with something like a fair value gap. So let's let price action play out. We can see it's going up, it's going up. Are we going to break up top? No. And boom, right there we get what our entry wants to look like. Now to clarify for people who haven't traded the strategy before, this right here is not a breakout. It has to close above, not wick. And also this would technically not be an entry just because it broke out. We want something like a fair value gap or an order block in order to confirm our entry. Now, once you get this entry, there are a couple things you can do here. You can either just place your order right here and get ready to take profits at like a 1-2, but I personally don't trade that rule set. My rule set is to wait for a retest around here and have a 1-2 risk to reward ratio. So let's see how this plays out. As you can see, we get filled right here, and I would actually not have an automatic fill. I would look to see, okay, this fair value gap was respected, so I'm going to actually buy here. And sorry, I would buy right here. And let's let this play out. Boom, we get filled at the end of the day. Little bit of a tricky trade here, but we got the job done. Okay, let's take a look at one more trade. So we're going to wait for the 15-minute high and low to form. There it is. I'll get at my computer around 9:30 EST, get this done, and then let's see what happens. Okay, so we have price breaking that low here, and then we have a second candle also who was outside of that low, and we have a bearish fair value gap here. So what am I going to look to do? I'm going to look to trade here. Now we're going to go short, throw it right here, 1-2 risk to reward ratio, and let's see what happens. Gets respected, so I would have entered here, but instantly gets stopped out. Now, why did this happen? This looks like a perfect trade. We see our 15-minute high and low, we break on the downside, and we have a fair value gap right here. That's respected because the candle didn't fully close out. Now, this could be considered a weak fair value gap because it wicked through, but I still think this is a valid entry. So why did this happen? And it's very simple. It's because we're not looking at higher time frame confluence. If we go to the 1-hour chart, you can see that price is actually bullish. We have this huge rally up, little bit of consolidation, and we pump back up. So this happens overnight with other institutions and other people from other markets buying into the market. So if the market is going to be bullish for the day, why would we want to short it? That just doesn't make sense. And to prove this idea to you guys, if we were just patient to wait for a bullish entry, we can see we would get one a couple minutes later and it would have ran and taken profits. Now, I personally would not have entered this trade because it doesn't follow my rules, but a lot of people trade the orb where they just look for a breakout and just instantly go in. And that's totally fine. A lot of people can profit like this. And if you're one of these traders, you would have caught this upside move and took in some profits. Now this just goes to show you guys something like higher time frame confluence or an indicator that helps you show this can help you not only reduce bad trades, but turn losing days or no trade days into winning days. That's how powerful this strategy is if you use higher time frame confluence. Now, I have this indicator right here that shows me if the day is bullish or bearish, and that's how I know personally, without having to go too much into the charts, looking at the 4-hour, 1-hour, marking out all the fair value gaps to see where price is headed. I can just look at my indicator and say, okay, I'm bullish for today. I'm not going to trade any of these bearish fair value gaps. If you want to use this indicator, I'll leave a link down in the description below. But now let's review the results. Boom, as you guys can see, we traded the NASDAQ 100 just like this strategy, both NASDAQ, but this had a 50% higher win rate. Even higher actually, because these 2 days were on Thanksgiving. I would not have traded these days, and many of you guys shouldn't have. So this would actually be closer to around 80% profitable trades. This happens because we reduced the amount of bad trades we took, number one, and we reduced the amount of bad choppy days we traded on. So that's 2 ways we reduce risk. And like in this example earlier, we turned losing days into winning days. So all these things add up to bring your win rate to about 50% more. You can see in this strategy, we took 25 trades with only 7 winners. But here we took 18 trades with 13 winners. So a lot better results. Thank you guys for watching. I hope you enjoyed this video. I try to make it brief. If you guys want me to go more into depth, leave a comment down below. And I'll also leave my indicator if you guys want to trade like this in the description down below. Be sure to subscribe. Thank you.